Hey traders, this is Ron Haidt at Markets Hammer. Happy Thursday. Hope you guys are doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involved risk, and specific financial issues shall always be addressed by your financial advisor. All right, the SPY down a whopping 18 cents today. Bulls still have the edge. The Dow is down 0.5%, but that's in big part due to 3M. Otherwise, it would have been green essentially. And the Qs, the NASDAQ heavy index was up 0.4%. Bulls still have the edge. So let's get to some of these earnings reports. Let's first kick off with who's announcing tonight. So as I do this video, it's pretty much right on 5 p.m. Eastern. And Amazon finished basically at 1,900 bucks. So if we come up here, type in Amazon, we can see as of 5 p.m. it's around 1918. It's only up 16 bucks. So it's going back and forth pretty much right where we're at. Bulls still have the edge, and that little double top up there towards 2050 would be the target. Now, a lot can change as the night goes on. More people read the report, upgrades come in, downgrades come in, and then you have tomorrow, of course, with the market open, the full day, we could see a lot of back and forth action. I heard there was some disappointment on the AWS side. We'll just have to see how that plays out. Now, Intel's another stock that announced after the bell. They finished down 1.89% today. There was the gap up here. We've now filled that gap, but none of that matters. It's typically fundamentals trump technicals. Intel after the bell, 53 and change. So if I zoom in here and I give you a little window where 53 is going to be, it's pretty much going to be right about, come on, there we go. So let me do this. This was the consolidation zone. February we broke out. Stock goes from about 49, 59. Now we're down here. This puts us below the orange line, which is the 50-day SMA, the institutional moving average. Again, it's why protected puts can be so valuable. Stock's down, almost 8-9% or so, not quite 10%, and you're violating the 50-day. Well, just like I said with Amazon, a lot can change tonight yet. There could be reversal, there could be further sell-off, who knows? We have to wait and see how it shakes out. But it takes out this 53 area. That was a little bit of a pause. You're also below the institutional orange line. Where's the next major support? If I zoom out, it would go back into this multi-month consolidation, which also coincides with the 200-day institutional moving average at 49 bucks. So we basically break 53 on a closing basis. 49 would be the next target. So right now, Intel is definitely trading bearish. Now, stocks that did have earnings today. Mo, and it's losing Mo money, down 6%, lower highs, lower lows, held the 50-day, and now we break below. There's this inverted head and shoulders down here from the December sell-off, January bottom, then the mid-February, late February breakout. 48-ish would be the target, another $3 lower, another 5-6% below there, back down in the 40s. Take a look at what really hurt the Dow today, which was 3M. Nearly 13%. 13% on any stock is big. It looks a little worse here just because of these tight numbers here on the margin. The support's going to come in. Let me actually delete all these drawings. Let me go out 2 years. Delete all drawings. There we go. So we're at 190, 180, 175 would be the targets. 5 as much as maybe $15 lower still. After losing 28 bucks today, protected puts would be saving your bacon, literally, right now. Let's take a look at Microsoft. And by the way, I assume you guys, through my continuous videos and talking about protected puts, that you guys, practice in a paper trading account. Nothing is ever advice to buy or sell. And when you're in your paper trading account, you can see how these puts can lose and gain value. If you want me to do some more examples, let me know. You can make a post or send an email in. But if you want to review puts on something like a 3M, we can do that in another video and then compare it to what would have happened if a stock doesn't move at all, maybe so far as Amazon's not moving. I'm happy to do that if you guys find it valuable. Now here is Microsoft. New all-time highs. They're doing quite well. And they were doing well last night. Sky's the limit. They are in infinity territory. Faceplant, it's rising up 10 bucks, almost 6% today. You're halfway into this filling of the gap. Target would be 215, purely technical in nature. Tesla, well, look what it did today. Down 11 bucks. Stock does move around a lot. It's like a jumping bean, but it's closing below some key levels here at 250. So if I take us back and do a 5-year chart, I said to you guys, 250, just watch, watch, watch. Well, today we broke it. The next significant support level is all the way down around 185-ish, because not only do we have sort of 3 areas here to watch, there was also a little pause here back in the early part of 2017, 2 years ago. Now you could say, well, hey, we're $2.37 below 250. The 250 number I gave you was an approximate number. It's just a nice big fat number to watch, but we broke it today. Continuation tomorrow just adds more weight to the bearish camp, and then you're looking at down here. Remember, this stock does trade violently, so if there's upgrades or anything like that, the stock could do a U-turn. But the 250 area, it's been broken. How about Xilinx? You guys watch this one today? This is a stock, if I take you back just 1 year, and I take you to financial. Remember I was doing those webinars, sending out all those emails, hey, one of the stocks to watch here in January is Xilinx, and it goes from here to here. And during that 3-month window or so, as high as I think is 81%, if my memory serves me correctly, it was definitely in the 70s, I think maybe even in the low 80s. It's risen that much of the time, as much as 70, 80+% of the time. And if we look at a chart of Xilinx, look what happened. In January, pop goes the weasel when it's in a seasonally bullish window. Whatever the earnings reports come out as, they're generally viewed as positive. And they're receptive. It's one thing to come out and have an amazing earnings report, but then you wonder why your stock doesn't go higher, right? Happens to all of us. Well, was it the right time of year? Were traders receptive to it? Is that the time where they focus on a stock like Xilinx? And it goes from here to here. And to prove the point, just check this out. If I can type in the ticker symbol, I'm still battling this cold. You guys can probably hear it in my voice. Just watch this. If I take you back the day before earnings, knowing that it's walking into a bullish window, January 23rd, this is what's going to blow your mind. January 23rd, let's say we do, at that time, June options just would have become available. But let's just do it for fun. Strike 90 would have been $9, right? Strike 90. And then I take you to, they don't even have the prices in here yet. Well, that's a great buzzkill. Well, let me show you what it would have been. Let's just take the last day they're going to give us here. That was the 19th. So the 18th would have been the last trading day. A June 90 is worth 43. That doesn't even take account the last couple days that it went higher. $9 into 43. One contract at 900 turned into 4,300. Better than a sharp stick in the eye, right? That's almost a 5x'er. It's absolutely insane. All by knowing this is the time when it's perceived as bullish, not now. So if I was walking into this report and I had access to financial, just check this out. This is the mind-blowing stuff. Look how the dotted line is the future probabilistic price based on the stock's own historical track record. Past performance is no guarantee of future performance. That is absolutely true. But look what historically it does. Just look at the line. It's flat into June. Look how it starts running higher January, February, March. There was one period throughout the whole year where Xilinx typically does really, really well. We just entered and exited that period in the last quarter. Knowing that, there's one time a year to trade Xilinx. And then you walk away and you're not caught in the downdraft because you lose the seasonality wins at your back. This is how important seasonality is in your trading. So just one more amazing example. So that is it. I wish you guys a fantastic rest of the week, one more day, and I'll be back with you in the Sunday video. Take good care, folks. I'll see you next time.